Binance takes legal action against fake billboard ads in Turkey. Binance TR, the Turkish arm of crypto exchange Binance, has warned investors in the region about an ongoing scam attempt that targets crypto investors via fake Binance-branded billboards and hoardings. Crypto investors are plentiful in Turkey, making up over 7% of the traffic to Binance's primary platform through a desktop browser, as shown by SimilarWeb data. Scammers in Turkey have taken advantage of Binance's popularity by renting numerous billboards to advertise fake Binance-themed opportunities. In the latest warning issued by Binance Turkey, a billboard is shown sporting an advertisement for a Binance tourist exchange that has no affiliation with the original Binance. The ad also includes telephone numbers that, when dialed, can connect potential victims to scammers. A rough translation of the warning reads, Binance plans to take legal action against those responsible for renting out billboards and posting fraudulent advertisements. The company has stated that it is easy to track these people down and will not stand for this behavior. And here's an example of that fake ad. Pretty scary. Some people have been scammed by criminals posing as Binance employees. These criminals try to steal people's money by getting them to create new accounts or share their existing seed phrases. Just last month, on April 15th, Binance set up a customer service center in Turkey that will offer round-the-clock support. The primary goal of this support center is to proactively mitigate fraud cases. As Cointelegraph previously reported, Binance is expanding its customer service worldwide. That's awesome that they are trying to mitigate this risk, jumping in head first, putting a service center right in Turkey where it's happening. Investors who suspect being scammed are advised to contact Binance's official customer support through official channels, including the website or mobile application. Coinbase is looking to purchase BTC Turk for $3.2 billion to increase its footprint in the Turkish market. According to Cointelegraph, both crypto exchanges have reportedly signed a term sheet. However, an official confirmation is still awaited. Coinbase is looking for a country director in Turkey to support their global expansion efforts. This individual will play a key role in ensuring that Coinbase operates in full compliance with local regulatory requirements. So if you're in Turkey looking for a job in the crypto market, that might be something for you. Up next here, LFG to deploy $1.5 billion to bolster UST peg and build BTC reserves. This week, the Luna Foundation Guard LFG plans to deploy $1.5 billion to help protect Terra USD's peg to the US dollar. Amid the sharp pullback across Bitcoin and the wider crypto market, this investment is crucial in preserving Terra's stability. The Singapore-based nonprofit LFG is part of the Terra Luna ecosystem and is responsible for collateralizing the network's algorithmic stablecoin UST to keep its USD peg intact, as well as managing the network's reserves. Details are sparse at this stage, but the LFG, large financial group, outlined on Twitter earlier today that it will first loan out $750 million worth of BTC to over-the-counter or OTC trading firms to manage and trade the capital. And here is a tweet out in regards to what is going on with that. After carefully observing the market, the LFG has decided to take out a loan to rebalance its reserves. This decision was made after seeing significant volatility in the prices of BTC, UST, and Luna in the past few days. Terraform Labs founder Do Kwon clarified on Twitter that the company is not trying to exit its Bitcoin position and is deploying capital in the short term to strengthen its UST holdings in the long term. So here is his exact quote there. Here is a tweet out from him in regards to a little bit more in terms of what is happening. LFG's $2.91 billion reserves are mainly backed by BTC, 91% or $2.7 billion. When the price of assets falls, the entity has to readjust its balance sheet to maintain the peg between UST and BTC. At the time of writing, BTC is down 12.7% over the past 7 days to sit at roughly $33,600, while UST is slightly off its peg at 99 cents. Terra's native asset Luna, which also helps maintain UST's peg via its burning and minting mechanism, has suffered significantly over the past week, dropping 24.5% to sit at $62.15. So if you are invested in Luna, definitely something to note. And Mining Capital Coin CEO accused of $62 million investment fraud scheme. Like every time we turn around, there's another fraud, hack, some type of something going on. CEO and co-founder of crypto mining and investment platform Mining Capital Coin, MCC, Louis Capucci, have been indicted by the United States Department of Justice for fraud. It is alleged that he orchestrated a scheme that defrauded investors out of $62 million. The DOJ has accused Capucci of conspiracy to commit wire fraud, conspiracy to commit securities fraud, and conspiracy to commit international money laundering about several alleged fraudulent schemes. If found guilty, he faces a maximum prison sentence of 45 years. The DOJ has indicted Capucci and unnamed co-conspirators for allegedly misleading investors about the profit potential of MCC mining packages and a native token dubbed Capital Coin that was backed by the biggest cryptocurrency mining operation in the world. Capucci is said to have boasted substantial profits and guaranteed returns by using investors' money to mine new cryptocurrency, but allegedly failed to deliver on the bargain. Capucci is also accused of marketing dubious MCC trading bots with new technology never seen before that could conduct thousands of trades per second. Investors were allegedly promised daily returns, but Capucci and his co-conspirators diverted the money to themselves. It's crazy. Additionally, the MCC CEO and co-founder is accused of recruiting MCC promoters and affiliates into a multi-level marketing scheme. In return for luring investors into the MCC ecosystem, Capucci is said to have promised anything from Apple Watches and iPads to luxury vehicles such as a Lamborghini, Porsche, and even his own personal Ferrari. Even just seeing that and reading that, I'm like, this seems suspicious, but I mean, to each their own. If they want to invest with someone who is offering things like that. The DOJ announced its indictment on the same day that the U.S. Securities and Exchange Commission outlined fraud charges against MCC, co-founder Emerson Pyers, Capucci, and two entities controlled by Capucci in CPTL Coin Corp and BitChain exchanges. According to the SEC, MCC, Capucci, and Pyers sold mining packages to 65,535 investors worldwide and promised daily returns of 1% paid weekly over the course of a year. When it came time for users to withdraw their funds, they were only able to purchase another mining package or forfeit their funds. The SEC has filed a complaint against two individuals for running a fraudulent scheme in which they promised outrageous returns on investments. They used investor funds to finance a lavish lifestyle, including purchasing luxury items like Lamborghinis and yachts. Anything that's guaranteeing a return on your money is typically not legit. That's why it's so important to do your own research before you invest in anything. The SEC issued a statement saying that the District Court for the Southern District of Florida issued a temporary restraining order against the defendants last month and in order to freeze their assets. So I'm sure that we will hear more to that in days to come as things develop with that. Up next here, Bitcoin whales jumping ship as exchange inflows reach 3-month high. The number of Bitcoin whales is decreasing rapidly and has reached levels not seen since earlier this year. This may be due to the 3-month high of coin inflows to centralized exchanges. Glassnode has released several bearish indicators for Bitcoin, including data suggesting a market exit for whales holding at least 1,000 coins and exchange inflows of more than 1.7 million coins, the most since February. High CEX inflows of BTC suggest whales are potentially exiting the market by selling coins, possibly as a way to prepare for a longer market downtrend. Recently, it's been reported that recent sell-offs were likely executed by short-term holders who had accumulated coins in late January and early February when prices had reached a 6-month low of about $34,800. Here's a tweet here by Glassnode Alerts, the exchange inflow volume when it reached a 3-month high. This was from yesterday. The Bitcoin Fear and Greed Index has dropped to 11, signaling that investors are feeling a high level of fear. This index rates the general amount of fear or greed among Bitcoin investors. Despite the current sentiment surrounding BTC, its daily transactions do not yet appear to have been negatively affected. According to on-chain data from Wide Charts, there are 233,892 daily transactions worth about $30 billion on Sunday, which is about the average since January. Lead on-chain analyst at Glassnode, Checkmate, tweeted on Sunday, "Many of you are waiting for the Bitcoin capitulation wick, partially confirming the notion that investors expect BTC to continue to fall." A capitulation wick is usually characterized by a sudden catastrophic drop in price, like the one witnessed on March 12, 2020. When BTC dropped 43% in a day to around $4,600. Market analyst Caleb Franzen tweeted to his 11,000 followers on Sunday that investors should look for markets to continue trending downward based on his analysis. What do you guys think? You think Bitcoin is going to continue going down? You think it's going to go up? I'm curious to see your thoughts. He believes that this suggests more pain is yet to come. As of now, BTC is down 10.39% over the past 7 days, trading at about $33,806. Up next here, from smart insurance to on-chain document verification, here's how Near aims to improve Kenya. Sancor, a Kenyan blockchain community, has partnered with Swiss nonprofit Near Foundation to launch a regional hub that aims to develop talent within the region and build projects that aim to improve the local ecosystem. That's pretty awesome. Sancor is involved in multiple projects that improve the agricultural industry and combat fraud. Kilimo Shwari is a blockchain-based insurance program that helps farmers deal with natural disasters. Ledja is a project which focuses on combating fraudulent documentation within Africa by using Near protocol for document verification. Sancor and Near are teaming up to develop talent within the region and support their journeys to become blockchain developers. Kevin Imani, the founder of Sancor, said that they are excited to work with Near and support the growth of blockchain development. I think that there's huge things coming to countries that, might not otherwise have these resources. So I think it's really cool that they're doing that. Sancor runs meetups where they educate younger Kenyans about Web3. They also have a partnership with Near, which helps with this education. As the hub becomes formalized, its educational arm has also already tied up with local universities and currently has 84 students and 6 graduates who were certified as developers through Near workshops. Marieka Flement, CEO of Near Foundation, said that they are also excited by the potential avenues throughout Africa for blockchain solutions. Flement mentioned that the partnership gives the firm an opportunity to find and partner with talents within the region. It's pretty cool. CBK published a discussion paper in February seeking input from the public on the development of a CBDC. The paper examines potential pros and cons and regulatory challenges around introducing a CBDC in Kenya. In other parts of Africa, blockchain and crypto adoption have progressed. Since in April, the Central African Republic, CAR, adopted Bitcoin as a legal tender. This means that the citizens of the CAR can use Bitcoin for their transactions, in addition to the Central African CFA franc. So that is pretty cool. Big things coming in crypto there. It's interesting always to see what countries are adopting what and why. I think that's going to be huge for, Kenyans in the African community. And last but not least here, Luna drops 20% in a day as whales dump Terra's UST stablecoin. Sell-off risks ahead. Terra Luna has recently faced a FUD attack on its native stablecoin Terra USDT. As a result, the token has seen a significant plunge in value. The Luna USD pair dropped 20% between May 7th and May 8th, hitting $61, its worst level in 3 months. This sell-off was caused by a whale who dumped $285 million worth of UST. As a result of this, UST briefly lost its peg to the United States dollar, falling to as low as 98 cents. Luna helps maintain the US dollar peg by Terra's elastic monetary policy. When the value of UST is high, users are rewarded for burning Luna and minting UST. When the value of UST is low, users are rewarded for burning UST and minting Luna. Accordingly, when UST supply shrinks, Luna's value dips, as stated by Will Commons, a researcher at Masari. And when the opposite occurs and UST's output expands, the value of Luna goes up. The chart depicts a decreasing trend in the daily supply of UST, corresponding with an increase in the daily supply of Luna. On May 8th, UST's market experienced contraction for the first time in 2 months, dropping by 28.1 million by below zero. Concurrently, Luna's supply expanded by over 436.75 million above zero. Luna's price may have been pushed down by the excessive daily supply against what seems to be a stable market demand. Terra's price decline has prompted Luna to retest a support confluence consisting of its 50-day exponential moving average, the 50-day EMA, the red wave, near $56, and a multi-month upward sloping trend line. Interestingly enough, the ascending trend line constitutes a rising wedge pattern in conjugation with another upward trending line above. Rising wedges are bearish reversal setups, so their occurrence on Terra's weekly chart suggests more downside is probable. Here is a chart of that. When analyzing technical patterns, a rising wedge breakdown often results in a price decrease that's about the same distance as the maximum distance between the structure's upper and lower trend lines. So there's the Luna USD weekly price chart featuring that rising wedge setup. If Luna falls below its current support confluence with an increase in volume, it could drop as low as $22.50, a 60% decrease from the current price. Alternatively, if there's a rebound from the support confluence, Luna could head up the wedge's upper trend line and break past $130 to a new record high. So that's pretty exciting if you're invested in Luna. Let me know what you guys think, where you think it's going. That's all we have for you today. Make sure to like, subscribe, hit that notification bell, leave a comment on what you want to see in a future video, and we'll see you next time.